Welcome back, guys, to a brand new episode. This episode is dedicated to fundamental analysis of stocks, and this will be specific to the air conditioning segment, and we will do situation analysis as part of this episode. As part of this episode, I will talk about size of the market, barrier to entry, raw material pricing, producing the product yourself versus contract manufacturing, selling white goods and to retail segment versus commercial segment. We'll also talk about R&D capabilities and also look at the service quality and its impact on the business. So we'll start with the size of the market. How big is our target market? That's an important part of valuation when we begin looking at the big picture. The middle class population in 2016 was close to 267 million. The 2025 estimate is around over 500 million, which means we are going to double in that 10-year period. So a company doing a sales of 4,000 crore could be doing more than 8,000 crore by 2025, and that's evident if you look at the middle class population and their ability to buy certain types of products. And air conditioning is one such product. Apart from that, you also have new feature-rich ACs coming in. You have the inverter ACs, for example, which makes your life so much easier in terms of savings from power consumption. And apart from that, you also get the advantage of having a uniform temperature. So these perks come from time to time, and the energy efficiency keeps going up. So the replacement demand will definitely be there, and it's going to increase in the future because people want to save on electricity from time to time, maybe 10 years or so, and they would see that their old AC is not up to the mark and it's consuming too much power, and people will want to make sure they change the air conditioner if their usage is pretty much high. And with the middle class growing, the usage is going to go up. So if we take a sample company that we mentioned earlier and say it has a 3,800 crore revenue in 2016, and think about it, with the doubling and the replacement demand, let's assume it's 10%, now your revenue is going to go over 8,500 crores. So if you put a modest 6.5% net profit margin that they currently have or had in earlier periods, then we would have around 550 crores bottom line. But think about it, the service revenue and the margins are going to go up in time because people can afford better air conditioners. Better air conditioners cost more, which means the margin can be increased if the product price can be increased even by a certain degree, which offsets the raw material cost, and you can add a little more premium. Little more premium charges could invoke a higher margin. So this is a possibility that you can think about, and this means the revenue by 2025 is going to be more than 8,500 crores. So for the same example, if we attribute the net profit margin to go up from 6.5% to 8%, then you would see that the bottom line would be pretty high. It could be going towards the 700 crores mark by 2025. And this is a good example to see how much impact the net profit margin can have. If you can reduce all your cost, bring the operating profit margin to a higher level, and make sure your other costs are kept in check, then naturally you should be able to make a better churn out of your existing assets. So this means the bottom line in terms of business income could go up as much as 3 times. That's an interesting thing to think about. So now we know that the probability of getting 3 times is pretty high. You could put a number to that probability. Do you think it's 50%, 70%, or maybe 80% probability that we would be able to hit this figure? That's up to you. It's your story. You should figure that out. But this was just an example to see what is the capability of a company, and how probable it is depends on how you value it. Now looking at the barriers to entry, if there is a barrier to entry that's going to help us keep these probabilities in check, make sure that we don't have a surprise by a new player who takes everything away from us. So what is the barrier to entry? The distribution channel is one very big barrier. If you set up a new company, if you want to put it into every distributor in India, India is a pretty large country, not as big as the United States, but still it is a large country. Apart from the distribution, you also have a problem with brand awareness. If people are not aware of a company, they won't demand that product to a dealer, and if they don't demand a product to the dealer is not going to be ready to stock those goods. So getting the brand awareness and the marketing is very important. That's going to be very expensive. You can't get it done in a short period, need some time, and marketing is a difficult task. And a pretty expensive task as well. Consumers often demand service support, raw material support in case they need to change a part. If a company is brand new, people often are not so happy to get into those brands because they are not sure if they can get a service done in the next 3 years or 4 years when the product really needs some servicing. So they will have to depend on third-party service providers, which people don't really like. The brand awareness is one important thing. But the service support is also a vital tool because people expect service in the next few years when the product could develop some problems. The warranty support is there, and apart from that, people might want to repair even after the warranty period. So if a company cannot provide a good quality service, then people are not going to be happy. And people are often afraid of new companies because they could vanish in the next few years and they won't be able to get spare parts, they won't be able to get enough support to get the product fixed. Mass production is another important factor to reduce cost. If you can reduce the cost by increasing the run size, then that is a very big advantage for you. If you can provide good quality product at a fair price, for example, Maruti has been playing this card for a long time. The volume has been a major factor for a company like Maruti. So if a company can produce in big volumes, the run size being high, that would reduce their cost. And if the cost is low, it's very easy to make an efficient product, quality product at a low price. That is a deadly combination for a successful product. So this means a new player is going to face a lot of issues. Getting into the business, scaling up is not going to be easy. That is one reason when Havells decided to buy Lloyd. The brand Lloyd has been there for a long time, and a 3,000 odd crore is not going to dent their balance sheet, but it could make them reach the market pretty much sooner than they could do on their own. So that is a good example of why a new entrant is going to be having a lot of problems setting up shop. Another big barrier is energy efficiency ratios being changed from time to time. The BEE label has been changing quite rapidly in the last few years. The last update in 2018 is one example where we saw a significant shift in the rating system. This means if someone is not capable of producing a 5-star AC, the specification that has been laid out in the recent past, they would be having a lot of customer churns because they would be going elsewhere if a 5-star AC is available at a marginally higher cost than a 2-star or 3-star AC. So that's a good example where if you don't have the capability to produce quality products with the latest trends at a fair price, then you would be in trouble. So raw material pricing is one another important factor that is almost taken care of if you have enough volumes, because you should be able to get the cost structure down, and any increase would mean you should be able to pass it on to the customer, or you should be able to get a long-term commitment from your suppliers. So both of these could be possible if you have a substantial market size and volume. So another important factor is contract manufacturing. If you can get your products manufactured elsewhere at a pretty good cost structure, and if you don't need to incur fixed assets to produce them, that's a good thing for you, as long as it's within the specification and if you can get the right contract manufacturer at the right price. And a lot of companies do that, and if you look at their balance sheet, you can see a difference in how the cost structure varies for such a company. So another question is, should you go for a company that is specialized in the room segment or the commercial segment? If you look at one example where they are present in both segments, you can see that their margins for room segment is close to 15, while the other segments vary between 6 and 9%. And remember that this company, for example, gets 57% of its revenue from the room segment. That means that's substantial and it's growing pretty fast. That's one important thing. And apart from the volume growth in this sector, you also see the profit margin growth in this sector. So as discussed earlier, the R&D is an important factor. We discussed about the impact of BEE label that changes from time to time, and the recent update was significant. So if you look at what happened around January of 2018, sometime when these changes took the market by surprise, you would see that people were not able to get a 5-star air conditioner so easily. Most of them had to be imported, the parts had to be imported, but even then, a lot of companies did not have a product in the 5-star and even in the 4-star segment. And everyone was concentrated in the 3-star segment, while a few people who could provide a 5-star or a 4-star air conditioners were having a good run during this time. And if you look at which companies performed, you can clearly see that some companies, even though they could provide a 5-star air conditioner, their price was really high. People cannot afford such a product. So I don't know whether they were selling enough quantity. But there are some companies which were able to provide a 4-star or a 5-star air conditioner at a very marginal increase when you compare it to a 3-star AC, and the quality is very good. The cost being low was selling pretty well. You could see that from their sales reviews that you can see for those products. The number of reviews could be linearly related to how much it sells, and you can also see that certain players like Voltas and Whirlpool, they were able to price it at a very sweet spot even for the 5-star and 4-star air conditioners, and they were selling pretty well. The cost was good, while for example Samsung's 5-star or 4-star air conditioners were pretty expensive. I don't know how much of those turned into an effective sale. So last but not the least, the service quality. As I mentioned earlier, small companies often face that issue where people perceive that small companies or irrelevant companies, a small market share company, may not be able to provide a good service. We often follow a herd mentality, because if someone buys something, we buy them, and if a company is new, not many would have purchased it. So a service issue would be anticipated for such a product, and people would be afraid to invest their hard-earned money in those products. But this will be very specific to first-time users, which is substantial in a market like India. But a repeat customer would be willing to give it a try for other products from a small player, because the service quality is very poor in all the air conditioning OEMs. So if you look at any OEM, the service quality is often mediocre at best, and you would see most of them being in the gray area. So think about it. So the service quality is important, but in the long run, how much of an impact it can have is something that you can think about. How much weightage do you want to give for service quality is up to you. So that brings us to the end of this episode, but we will have a series of such episodes to look at different parts of situation analysis, competition analysis, and more on this segment. And we will also look at other segments which are interesting to discuss. Don't forget to subscribe to my channel and make sure you press the bell icon so that you get daily updates on my videos. Thank you. Bye-bye.